When applying for a mortgage, there are a couple of choices that you'll need to make. One of them is the repayment schedule. In this video, we'll go over the several options and which one best suits your situation. For the repayment schedule, there are two main options. The first one is a linear mortgage. With a linear mortgage, you repay the same amount of principal every month. In other words, your repayment part remains the same over the course of 30 years. The 30 years comes from the duration of the mortgage. So your mortgage generally runs for 30 years and each month you repay the same amount in principal. On top of that, the interest that you pay decreases over time due to the fact that you're repaying your mortgage. So that means that over the course of the mortgage, you start paying less and less and your monthly installments become lower and lower. When is linear mortgage interesting for your situation? Well, since your monthly installments decrease over time, we see that people that are expecting their income to also decrease choose for a linear mortgage. Also, people that want to repay their mortgage a little quicker compared to the standard repayment schedule, but don't have the discipline to do it themselves, tend to choose for a linear mortgage. The second option is the most common one in practice, and that is the annuity mortgage. With an annuity mortgage, the interest that you pay plus the repayment get mixed together, and out of that mix, an annuity is calculated. In other words, your monthly installment. That annuity is calculated in such a way that it remains the same over the course of 30 years. If you were to look at it in a little more detail, you see that in the initial years, you start paying a little more interest, and over time, the interest part decreases and the repayment part increases. When do people choose for an annuity mortgage? Well, especially people that expect their income to positively develop over time choose for a fixed annuity, so for a fixed monthly installment. That way they can kind of grow into the mortgage and kind of grow into repaying the monthly costs. On top of that, the differences between the linear and the annuity mortgage currently are quite significant. So some people just find the linear cost way too high. So which of these two options is the cheapest? Well, to put it bluntly, if we just look at the total cost over the course of 30 years, a linear mortgage is cheaper compared to an annuity one. But with an annuity mortgage, you can kind of recreate a linear one by making additional down payments along the way on your mortgage. That way you balance out eventually the difference between the linear one and the annuity one. That is, of course, if you do make sufficient additional down payments. A third option that is a little less common nowadays is the interest-only mortgage. With an interest-only mortgage, you're only paying interest. So that means that eventually at the end of the day, at the end of the 30 years period, your outstanding mortgage debt is similar to the initial one. Currently, you have the ability to finance up to 50% of the market value with an interest-only mortgage. But a very big downside of this interest-only mortgage is the fact that you don't have the ability to deduct the interest that you pay from your taxable income, meaning you won't get any interest rate deductibility for the interest that you pay for your interest-only mortgage. Given the fact that currently the interest rates are a lot higher compared to, let's say, 2.5 years ago, an interest-only mortgage nowadays isn't that interesting. If you want to know more about mortgages, or if you're interested in more mortgage tips, click here.